wait for it to go here. All right. Good evening, everyone. My name is Tyler Ballhorn. I'm the founder of Stockscores. I'm going to be the host for tonight's webinar. We're going to talk for about maybe an hour tonight, including questions and looking at some stocks at the end of the night. The itinerary for tonight, and tonight's session is focused on active trading. So we'll give a little bit of my background. Going to describe what is active trading and what you need to know to actively trade the market. I'm going to talk about strategy trading, which is how I approach active trading. We'll talk about and demonstrate the day and swing trading processes, how you can learn to actively trade with my approach, a class I have coming up in May. And then at the end, we're going to look at some examples and take your questions on stocks. I'm going to actually give you my assessment of the market and do some analysis on the bigger picture for the stock market in case you're wondering what's going on with the market in general. All right, so my background. For those of you that have taken this in before, you've probably learned this already, but I've been trading for about 25 years. I started when I was 19 years old. I started with about $3,000. At one point, I took $30,000 that I had saved up and turned that into $500,000 in 3 months using many of the methods that I'm going to show you tonight, mostly day and swing trading. I developed proprietary tools and indicators for my approach about 15 years ago and have been sort of continuing to fine-tune those things over time. And I've been teaching for about 15 years as well. My basic premise on how I approach the market is that if you do what everyone else is doing, you will get what everyone else gets, and that's basically average. I'm not really into being average. I want to beat the average, so I am trying to do that every day. And what we're going to talk about tonight is how I approach the market. So what is active trading? Well, there's two categories that I have for active trading. One is swing trading and the other is day trading. Swing trading means holding a stock for more than one day, but typically not more than a couple of weeks, maybe even a month. Day trading is much more short-term. You're out of your positions by the end of the day. So if you buy them at 9:47 and sell them at 2 o'clock, that's a day trade. You're in and out within the same day. Day trading is actually less risky than swing trading because when you are out of positions before the close, you take away that potential for the stock to gap up or down. And that adds a lot of risk. If you hold a stock overnight, like you look at Twitter, what happened after the close today, actually happened in the final few minutes of the day, but if a company announces negative earnings, their stock can go from $20 to $15, and you never get to trade it in the middle because it closes one day at 20 and opens the next day at 15. So that, when I say day trading is less risky, that's what I mean. With that said, day trading also exposes you much more to emotion because we get caught up in the gyrations of the market, and people can really hurt themselves without good risk management if they are day trading. So day trading requires, I think, a little more expertise, a lot more discipline and focus, but it's intellectually no different than swing trading, and in some ways it's less risky. I like to do both. I tend to do whatever's working the best, and the market sort of has its ups and downs as time passes. So there's times when swing trading is more more profitable than day trading, and there's times when day trading is more profitable. When zooming in and out of stocks quickly in and out, you can turn your capital over much more often, and that generates a bigger overall return. So I'm going to show you both tonight. I'm going to show you how I do both. And if you took in my webinar last week where I showed you what I was doing during the trading day, this is going to be a little similar, just with the nighttime focus as opposed to walking through it during the day. Now, my approach to active trading, whether it be day trading or swing trading, is based on a very simple concept, and that is searching for stocks that are behaving abnormally. I want to play the stocks that are moving with statistically significant abnormal price movement and often statistically significant volume. And I've developed some tools to do that, and I'll show you some of those tools tonight. The market scan tool on Stockscores is the main one, and I've also developed some proprietary indicators for some other software that allows me to really focus in on the stocks that are behaving abnormally during the trading day before anyone else catches them or before most people catch them. So what do you need to actively trade the market? I think there's 5 things. Number 1 is capital. I'm often asked, how much money do I need to trade the market? I don't think that there's really a lower limit. The brokerage houses generally won't open an account for you unless you have at least $1,000. For some, that threshold is $10,000. For some, if you are in the U.S., you have to worry about the pattern day trading rule, which requires $25,000 of capital, but it's only in the U.S. I always tell people, even if you have $1 million, I think you should start slow. You should actually start trading with no money, and you should learn first. I built a trading simulator. It's free to use. You can use it at tradescores.com. And that trading simulator allows you to buy and sell just like it was the real market, but without risking real capital. And I think in the early stages of your learning process, that's the best way to do it. It's a little bit hard because I think people aren't really motivated. They don't get into it as much unless there's real money on the line. But the nice thing about our simulators, it tracks your performance in a very realistic way. And you can really get a sense of whether you are doing things properly without having to risk real capital. The other criteria, I guess, that you have to consider is what is your time worth? You know, if you plan to day trade and you're going to sit there all day buying and selling stocks, you know, what's the minimum amount of money you got to make to sit there all day? Is it $100? Is it $500? Is it $1,000? The more money you need to make to justify your time, the more capital you need. You know, if you have $10,000 in your account, you can probably make $100, $200 a day, maybe even $300. If you have $100,000 in capital, you can make $1,000, $2,000 a day because of leverage, because you can throw more money at it. There's generally speaking a declining return on capital with more capital that you have. It's harder to trade $1 million than it is to trade $100,000, and $100,000 is harder to trade than $10,000 because there's just not always enough opportunity to move in and out. I think the sweet spot is in that $20,000 to $30,000 capital range. It allows you to have enough buying power to buy some of the more expensive stock. You can do it $10,000, but sometimes you're limited with not being able to buy some of the more expensive names. And that's really a function of the market. The last couple of weeks, most of the stocks that have done well, the movers, have been more expensive. We're in earnings season, and that tends to drive these large cap stocks, which move significantly during the day. And it's just taken more capital to do that. But that's not always the case. Oftentimes, the stocks that are moving are the $2, $3, $4 stocks that can go from $3 to $5 in a single day. It doesn't take a lot of capital to trade those. And you just have to trade the market you have. Now, the other thing you need is a broker. The broker is the firm or the organization that facilitates the trades that you make. When you're actively trading, I strongly recommend you use a direct access broker. Direct access means that when you hit the buy button or the sell button, your order goes directly to the trading floor. It doesn't go through a third-party market maker. It's instantly to the NASDAQ or to the New York Stock Exchange or to the Toronto Stock Exchange. And that straight through processing saves a lot of time, and it gives you the best price possible. So when you're actively trading, time is often important. And so I want to be with a broker where if I hit the buy button, I want to get my confirmation back that I own that stock in less than a second. And we'll talk tonight about the broker that I use. They're our sponsor as well, but I've used the same broker since, 06, 07. And they have that direct access. So it makes a real difference in my overall profitability because my costs are low, and also in the efficiency of my orders. I never have to wait to know whether I own the stock or not. Third thing is tools. You want tools that give you an edge. You don't want to do what everyone else is doing. You want to do things that most people aren't doing. And so I developed my own tools. I don't use normal analysis tools, things that you can get that hundreds of thousands of other people can get. I developed my own tools, and I'm going to show you some of those tonight. I have tools in my website, Market Scan Tool on Stockscores.com. I also have some proprietary indicators I use in some real-time charting software that allows me to, just have an edge, and that's really what it's all about, tools that give me an edge. I sell those tools or license those tools to other people, other traders. You could be one of them, but it's not a lot of people. I don't, I'm a trader first and foremost. I don't want to have a big business of selling my tools to hundreds of thousands of people. My audience is very small, mostly people in Western Canada, although we have customers and users all over the world, but it's not a big It's kind of a niche little product that a small number of people use, and that's what gives us an edge. And I think that's a real advantage when we're trading. And again, I'll show you these tools in a little bit. Second thing is, or fourth thing is time. How much time you have will determine the style of trading that you do. If you have all day to trade the market, then you probably want to be a day trader. If you can only look at the market a little bit in the morning and maybe kind of casually throughout the day, you might be more of a swing trader. I like to day trade, but my day is pretty busy, and so I tend to do most of my trade entries in the first 2 hours of the day because that's when 80% of the trades come, is in the first 2 hours of the day. And then I really don't look at the market through the day, and I just sell my positions at the end of the day. So I'm in the Pacific time zone, so I'll buy stocks from 6:30 till 8:30, and really almost just 6:30 till 8. I don't get too many entries after 8 o'clock. So from 6:30 till 8 o'clock, I do most of my entries, and then I'll spend the rest of my day doing other things, and then I'll come back in the last half an hour of the trading day to exit my positions. You can do that with swing trading as well. Most of the swing trade entry points come in the first hour and a half, 2 hours. Now, if you want to do it all day, you have that potential to find a few more extra trades that you would otherwise miss if you weren't doing it all day. But the most critical time is the first 2 hours of the day and the last half an hour. Finally, you need strategies. So I am a strategy trader. I'll talk about that in a moment. But I have a set of rules for when to buy, when to sell, how to manage risk. I've spent 25 years developing and fine-tuning those strategies, and I'm always fine-tuning them. I have a process underway right now with one of my day trading strategies where I'm working to refine the exit rules because the market is always evolving. It's more or less the same year after year after year, and the basic concept that, people act on fear and greed, and those things never change. But there's fine-tuning that you can do based on the market condition to really focus in on the best ways to make money for that market. All right, so that's a little overview of the things you need to actively trade the market. Let's move on now and talk about strategy trading. So as I said, for me, I buy stocks with a set of rules. I have a list and a process for identifying the stocks I'm going to buy and when I'm going to buy them. I have a process and a set of rules for how many shares of a stock I'm going to buy using a risk management formula that I use and that I teach people to use. And I also have a method for when to sell or exit those positions. We do have some short selling strategies as well, but I tend to mostly buy stocks. I find that it's a more effective way to trade, especially in a market like we've had where we've just had this continuous upward trend since 2009. That may change soon, and then at that point I'll become a little more of an enthusiastic short seller, but for the most part I do buy strategies only. Risk reward is a real important concept I'm going to show you that in a moment. I'm also going to show you the equity curve for one of my day trading strategies. So if you were in on the presentation last week, this will be a bit of a repeat, but I just want to show you that. So let's first talk about risk reward. This is a stock that I day traded yesterday, and I bought it right where my cursor is. Hopefully you can see my cursor moving around. And at that particular point, it met the criteria of one of my day trades. So the blue line that you see on the screen, on the chart, is my entry price. That was $2.86. The yellow line was my stop loss price. So the difference between the two is the risk of the trade. So in this case, if I'm buying at 286 and my stop loss point or my support price is at 270, the risk of the trade is 16 cents a share. That means if I buy 1,000 shares, my risk is $160. Well, every line above this represents a multiple of risk. So this is the risk, and this first line is a reward of 1. That's the same space as the risk, it's just moving to the upside. So once it hit $3.01, I was up a reward for risk of 1. When it went to 316, now the reward for risk was 2. At 331, it was 3. At 347, it was 4. And I always measure my performance in the market using this concept of reward for risk. It's how I measure my performance in the market. So this particular trade, I exited at the end of the day just under 3-1. So it earned 1, 2, and almost 3. I think it was about a 2.9 reward for risk. If I had sold at the absolute high, I would have been able to sell at 4.7 or so. But it's not realistic to sell stocks at the high. I mean, I do it once in a while, but let's be honest. If you could buy everything at the low and sell at the high, you'd be a miracle worker. That's just not going to happen. We're trying to get the majority of the move in the middle and we don't try to buy at the bottom, we don't try to sell at the top. In fact, those are the most expensive ways to try and buy and sell stocks. So that's a day trade using my intraday pullback. Now you'll notice that there's some blue dots on this chart. Earlier I talked about my proprietary indicators for some software that I use to trade, and those blue dots are a cue, if you will, to take a look at that stock. And so anytime there's a blue dot, I actually get an alarm ringing on my software, and it tells me to look at that stock and consider whether it is an actual entry signal. So I had an entry signal right here, which was actually 2 candles after the blue dot, but we have a set of rules that we use around those blue dots, and that's how that worked out. Let's look at another example. So here is a stock from a couple weeks ago that I traded, and you can see that there was a blue dot right there, and that was my entry point. So the entry price, this is a much more expensive stock, $103.47. The yellow line of support was at $102.30, and this stock ultimately within the day went up 1 reward element, 2, 3, 4, 5, 6, almost 7. Now if you had sold at 6, which is what my exit strategy would have done on this trade, if you sold at 6, that meant that you earned 6 times your risk. So if you risked $1,000, then you earned $6,000. If you risked $100, then you earned $600. All right, so that's how we gauge reward for risk. Now again, notice that little blue dot there. That's what told me to consider the stock as a buy, and it met my visual criteria as well. So I always do a visual assessment of the chart. Not every blue dot is important. This one, for example, didn't pass the other rules that I have, but this one did. Also, this one did as well. And then we just enjoy the upward trend that evolves out of that. Now we can also swing trade the market. When I'm swing trading, I use pink dots. So I look for stocks making these little pink dots, which is again one of my indicators, and it's something that I make available to my students. It only works with this software program, and this software program has a fee to it. It's not my program, but it costs about $300 a month to subscribe to it. You can also just subscribe if you're one of my active trader students to a service which I have, which basically I pick the entry points for you and I tell you about them. That service is $195 a month, but it's only available to my active trader students. So basically each day I spend the first 2 hours of the day looking for dots, pink dots, blue dots. In this case, we had a blue dot right here on the 15th of April, and it met all the criteria of my swing trading strategy, something called the Stockscores Simple Swing. And it's continued to move higher. It actually gave an exit signal today on the 23rd of April when it pulled back through this yellow line, and that meant that it had a reward for risk of 4. So again, if you risked $1,000, it earned a reward of $4,000. If you risked $100, it earned a reward of $400. The higher you risk, the more money you risk, the bigger a position you take in the trade. So that's really what's determined by the risk that you take. Here is another swing trade, and this is actually one of the featured trades on my newsletter as well. I have a daily newsletter that is available to my subscribers. And you see there's a pink dot. It was also a blue dot, actually, a pink and a blue. But the pink dot is what triggers my entry signal for my simple swing strategy. So again, entry price is there at the blue line, stop loss at the yellow line, and then we just count a reward for risk elements. Now, when you do that over time, you can start to accumulate the trades that you take and measure the overall performance of your strategy. So what I've been doing since March 9th is testing one of my day trading strategies. So the day trading strategy that this entry signal came on, so for example at 11:26 on April 14th, this stock met the criteria of my intraday pullback play strategy, and I plot all those in an Excel spreadsheet each day. And there's typically anywhere from 3 to 10 trades a day on that strategy. So since March 9th, I've been accumulating all of those trades in a spreadsheet so that I could graphically show the performance of that strategy over time. Now, I haven't updated this spreadsheet in the last week, but it's continued to move higher since then. The way these lines work is basically we start back on March 9th with 0 profit, and as time passes, the line is moving up because the strategy is working. Now, you'll notice that there's actually 6 lines here. Those 6 lines are all the same entry point, all the same entry rules, but different exit rules. I've been testing different exit rules, and I'm just plotting what's called the equity curve for each of my exit rules, different trailing methods, different stop loss methods, that sort of thing. So the best performing one is the gold line at the top. And you can see that right now, and it's probably a little tough to see the numbers, but over on the left-hand side, this is 140,000. So using a $1,000 risk tolerance since March 9th, if you were perfect, if you traded the strategy exactly as the rules dictated, which is really not realistic to be exact, I mean, nobody's as good as a computer, you would currently be up about 145,000. And again, this is as of about a week ago. It's a little higher now because this strategy continues to do well. All right, so that's what's called an equity curve. And when you're looking at a strategy, when you're developing a trading strategy and testing it, you want to plot these equity curves to make sure that they rise steadily over time, that they don't have wild swings, that they don't have big drawdowns. By drawdown, I mean, like here's a drawdown on the green line here, where, you know, for about 6 or 7 trades, it kind of moved lower. That means there was some losses there. And that was with one particular exit strategy. Now, the other exit strategies did better. They didn't suffer that same loss, but that's why we test. That's why I do this testing process to figure out what is the best set of exit rules. You can see that there's times when we go a little bit sideways. So, you know, the market's having a rough couple of days. Oftentimes, I won't make any money for a few days. And then the market gets going again, and we see my equity curve start to point higher. So that's what I've been doing for one of my day trading strategies. So what I'm going to show you now is the process I use to identify day trades. And really my process is twofold for day trading. First, I create a watch list of stocks that are worth day trading. So every day I have a set of rules which defines my watch list. And I have a tool to do that on Stockscores called the Market Scan tool. And if you are one of my active trader students, you have access to a scan in that tool which will give you the list of stocks that are worth day trading today. Typically, the watch list is 5 to 20 stocks. Today it was quite slow because there's a Fed meeting tomorrow, so the market's always slow ahead of Fed meetings. But there was maybe 7 or 8 stocks on the watch list today. I then monitor the watch list using real-time charting for my entry signal. Okay, so that's a process I'm doing throughout the day, and essentially what I do is I filter the entire market, 15,000 stocks. I whittle it down to 5 to 20 stocks using the tool that I'm going to show you in a moment, and then I monitor those stocks for the entry signal. Most of the good trades come in the first hour to hour and a half of the day, or at least our eligible stocks we'll find in the first hour. That's our watch list. And then the entry signals on the watch list come in the first 1.5 to 2 hours a day, most of them in the first 1.5 hours. And we have a process for doing that. So I'm going to jump over to the Stockscores website now. I'm just going to bring it in here for you. And I'm going to go back up to my Market Scan tool. I've logged in. And I'm going to select my day trader scan. Now again, this is only available if you're one of my active trader students. So there you see day trader. I can run the scan. And it gives for me a list of stocks that are worth watching for day trades. Now I then have to do another step where I visually inspect these charts to look for those that have the right kind of chart pattern. Now I know JetBlue was on my watch list today, and if I click on JetBlue, I can look at the 2-day chart of JetBlue, and you can see that it traded some pretty abnormal volume today. This is a 2-minute chart going back 2 days, so each one of these little bars represents 2 minutes of trading. And it had some abnormal volume there, little rally there, and then an entry signal right where I'm circling just after 11:30 this morning. And it did okay. It moved up from that point. It wasn't a barn burner or anything, but that's how the process works with Stockscores, is you can build your watch list starting at about 7 o'clock Pacific time, 10 o'clock Eastern time. About half an hour after the market opens, you can use that tool to pick your day trade watch list. I also do it in this tool where I run a scan called Gainers. And again, this is one that you have to subscribe to. It's about $300 a month to use this tool. But it's an excellent tool because it does what Stockscores does delayed. It does it in real time. And so what I do is I grab all of the stocks that have a sufficient number of trades, copy them, paste them into this, what's called a radar screen, where I can calculate whether the stock is trading abnormal volume. And that's one of my own proprietary indicators. I give that to my students to calculate which stock should be on the watch list. And then I just start looking at, there you see JetBlue is 10th on the list. And I can plot that as a 2-minute chart. And you can see there a little blue dot. Everyone hopefully can see that little blue dot. Maybe I'll blow this up a little bit for you. So there is the the little blue dot right there, and the stock went up almost to 3 to 1, closed the day at about 1.5 to 1. So if you risked $1,000, you made $1,500. If you risked $100, you made $150. And that's all in that day trader watch list, or from the day trader watch list. All right. So moving along, and you can see there's a number of stocks on there. Not all of them meet the criteria. UPS was one that did, although it didn't work all that well today. It had a little bit of a run in the morning and then kind of went sideways all afternoon. I bought that today. RCII is another one that I bought today. You can see there my little blue dot. Sorry, this one is the one that qualified, the little blue dot right there. It closed the day just under 1-to-1 reward for risk. All right, so that's how we use that particular tool. Now, we're going to use this tool for swing trading as well. We'll come back to that in a moment. Let me just continue along with the presentation. The swing trading process really looks for stocks coming alive with price and volume action early in the day. We have some powerful tools that are really key to beating the crowd to these stocks. I'm going to show you those tools, but what we're really looking for are something called action candles. Action candles are little pink dots on the chart that come early in the day typically. So let me pull this screen up again. I'm going to make this a 13-minute chart, and I'm going to plot a stock that I know had an action candle this morning. See that pink dot right there? So when I was running my live trading service, where I've got a group of my active trader students following me as I do the analysis for them, and it's really a good learning experience for people learning how to trade, I identified this stock in the first 13 minutes at $1.20, and it went up to $1.28 really quickly, settled the day at 123. So it's still up, but this is a trade, a swing trade, that'll probably play out over the next week or two. All right, it's a swing trade, it's not a day trade, it's something a little bit longer term. So the way I do this process is I can do it on Stockscores, or I can do it in that software with my special indicators. If I jump over to Stockscores now, I'm going to go back to the market scan tool, and I'm going to select this time something called the Stockscores Simple Swing, again an active trader scan. I'm going to run the scan, and it gives me a list of stocks trading with abnormal volume. Now at the end of the day, this scan tends to produce a lot of opportunities, but early in the day you don't get quite so many to have to look at. So there's the one that I was just showing you, PRAN. It came up in this scan. And what I'll do is I'll look at the daily chart first. If the daily chart meets my basic criteria, then I'll take a look at a 10-day, 30-minute chart looking for the right kind of pattern. What I liked about this one is it really came alive with some abnormal volume, some abnormal price action. Now, if you have other tools, you can find these stocks as well, but you usually find them a lot later than what I find them. If I go back into here, again, I run a process where I grab all my gainers and I copy them. I tend to do this just for stocks under $15. I prefer to swing trade that price group. So I'm just going to grab some of these stocks under 15. I can copy them into this screen over here, which is designed to find action candles. So it's just going to take a moment to calculate, and I don't know if there was any action candles at the end of the day today. Doesn't look like there was. I can actually get it to look back to the opening candle. Let me just do that here because I know there was a number of action candles on the open. Let's just see what comes up. So there you can see some numbers are showing up in there. So there's all the stocks that made action candles in the opening candle of the day, and I just fine-tuned my indicator, and this is my own indicator. It's not something that's for public consumption. It's my very own thing that I created. But there you can see PRAN. If I click on that, there was a pink dot. AK Steel. There you can see the pink dot. So that's what that tool does, is it helps me find these things in real time before anyone else finds them. All right, so that's a little quick overview of how I swing trade using either Stockscores or my Stockscores indicators in that real-time software that allows me to search the market in real time. Now, how do you learn how to do this? There's really two things. There's the way that I did it, which is something that I started 25 years ago, and that was to develop and test my own strategies. It took me about 8 years and a lot of expensive lessons before I was successful. I really didn't make good money in the market for the first 8 years of my trading. I was a student. I was going to the University of Calgary. I kind of paid my way through school, through university, but I wasn't making, real good money until about 8 years on when I started to figure it out. The other way to do it is to have me teach you how to do it, and that occurs or happens when you purchase one of my Stockscores trader training programs. When you do that, you're really going to learn from my 25 years of experience. I have traded tens of thousands of times. I have watched the market day after day after day for 25 years, and I just have a lot of experience in how to trade the market, but also how to teach people how to trade the market, because I've been also teaching for the last 15 years. The workflow through my education programs is as follows. Step one is you read my Mindless Investor book. You can buy that off of Stockscores.com. It's $36 with shipping. And then that sets you up to get into the foundation material. And once you learn the foundation, which are the core skills for understanding my strategies, you can then focus into my strategies with the Active Trader program, which is my day and swing trading strategies, or the Investor program, which is my longer-term investment strategies. The Stockscores Education Center is something that we built on Stockscores last year, where you can learn online everything that I teach in my different courses. So in the past, I would teach in a classroom. I would, be at a University of Calgary or Simon Fraser University in Vancouver, and I would teach over the weekend my methods. We'd start in the morning with the foundation material, which was the how to read charts, how to do risk management, that sort of thing, and then in the afternoon, we would actually do strategies. Well, what I did is I took all that stuff and I put it online. It's now in something called the Stockscores Education Center, which you can see on Stockscores. I can go into education, and there you can see all of the individual modules for, in this case, the foundation course. So the foundation course teaches you the foundation skills for putting my strategies to work. So if you want to learn how to read chart patterns, there's a lesson for that. You want to learn how to exit, there's a lesson for that. How to do risk management, lesson for that. How to scale into positions, what is scaling and how do you do it? There's a lesson for that. So you can see there's more than a dozen lessons there, and each lesson has a written component where I can read about it. I can print that off so I can have a hard copy if I want to look at it when I'm not at a computer. There's also a video. You can watch the video on a computer, on a smartphone, on a tablet. You just click on play and it will play that video. As long as you have an internet connection, you can watch that video. This particular one is 30 minutes long, and it's on the 6 elements of chart patterns, which are what we use to analyze charts. Once you've done the lesson and the video, you're ready to do the assignment, which is where you're asked a series of questions to make sure you understand the concept. At the bottom of the assignment is a video explaining the answer to all of the questions. So it's very self-directed. I'm always available to you to answer any questions that you have, but I think the answer videos do a real good job of explaining what you were supposed to be looking for in those charts or in whatever that lesson covers. Finally, there is a multiple choice test to make sure that you understand the concepts. So this is a way for you to assess whether you really understand the concepts of that particular lesson. Okay, so there you can see questions. There's, I think, 10 questions in this one. And you just answer it. Once you've answered it, you submit the test. It gives you a score for that particular test, and you can actually view an explanation of why the answer is as it was. So again, very self-directed, something you can work through at your own pace. Some people go through the foundation course in a day. Some people take 2 months to do it. It's really up to you how quickly you work through it. Each lesson is anywhere from, I would say, 15 minutes to an hour to get through it. So it's a matter of just taking the time to go through those things. Now, once you have done these lessons, the foundation, then you get on to learning the strategies. So if you want to learn the intraday pullback strategy, which is the one that I showed you the equity curve for, there is a written lesson and there is a video explaining it. There's some others as well, all different strategies for day and swing trading in the Active Trader course. Now, the foundation gives you access to the foundation lessons in the Stockscores Education Center, and it really teaches you the core skills that prepare you for the implementation of any of my strategies. The investor course gives you access to the foundation material, but also the investor strategies. Plus, it gives you access to the Stockscores investor strategy market scan. So when I go into the market scan here and I select any of these strategies, appear when you are one of my investor students. So if I want to run the Stockscores Simple Canada scan, I can do that right there, and there's a list of stocks that meet the criteria of that investing strategy. That's a longer-term strategy. You also get email support from me. I answer email very quickly, so during the trading day or in the evening, whenever you have a question about what you've done or what you're trying to do in your trading, not sure of something, fire me an email. You'll always get an answer back within a day unless I'm on an airplane or in a hospital. I'm very quick at answering email. You also get 6 months access to the tool, which is the Stockscores Market Scan, this tool that I was showing you. You get 6 months included with the course. After 6 months, you pay $300 a year to continue that access. There's other ways to get that for free. I'll tell you about that in a moment. Finally, the Active Trader course, you get the foundation, you get the investor, plus you get access to my Active Trader strategies. So it's just that much extra. If you want to learn how to day and swing trade, this is the course for you because you're going to get that, but you're also going to get everything else. You get access to all of my scans in the market scan. You get the same email support from me, same tool, but you also get those proprietary real-time indicators that put the little dots, whether it's the little pink dots or the little blue dots. We have other tools that we use. I haven't gone into all the detail of that, but there's a bunch of extra videos that teach you how to use this program to day and swing trade the market with my strategies. Finally, we have a mentorship option. If you want all of my education material plus you want one-on-one coaching from me for 6 months, then the mentorship is the way to go. We do web meetings where you log into a meeting software program where we can talk in real time. I can show you what's on my screen. You can show me what's on your screen. We can just teach you really one-on-one. It takes a lot more of my time. We do that for 6 months. And so it's a more expensive option, but many people like that one-on-one coaching, and I think you do learn it quicker by having me coach it for you, and some people just like that direct support from me. Here's the pricing. Foundation course, $9.95. Investor course, which includes the foundation, $24.95. Active Trader, which includes the investor and the foundation, $34.95. Mentorship, which includes everything, plus 6 months of one-on-one coaching, $7,495. All prices are in Canadian dollars. I know we have people in the webinar tonight from around the world, so for instance, if you're in the US, you can take off probably 18% because of the difference in our currencies. If you want to upgrade, let's say you want to do the foundation first and then upgrade to the investor later, you pay the difference plus $250. So the upgrade fee to go from foundation to investor is $1,745. To go from investor to active trader is $1,250. To go from foundation to active trader is $2,745. So hopefully you get the idea about how the upgrade cycle works. Now, there is a way to get a better price if you are a Canadian resident. You can open an account with Desjardins Online Brokerage. They're going to come on in just a minute to explain a little bit about what they do before I get into doing some stock analysis. But if you have an account with them, the foundation is free, so you're saving $995. If you have an account with them and you want to do the investor course, you pay $1,000, so you save $1,495. If you want to do the active trader course, you pay $2,000 instead of $3,495, so you're saving $1,495. The mentorship drops down to $6,995. So I'm going to let Wayne come on and describe a little bit about Desjardins and what he does. Now, Wayne is the Western Regional Manager. He works out of the Vancouver office for Desjardins, and he's just going to talk for 2 minutes about Desjardins services, and then I'll come back on and talk a little bit about my upcoming May class, and we'll do some stock analysis together. So Wayne, are you there?
I am here, Tyler. Can you hear me?
I can hear you great, so go ahead.
Great. Well, thank you, Tyler, for putting on once again a nice presentation. I have heard you many, many times, and every time I learn something new. So thank you for the presentation tonight, and thank you to all the attendees joining us. I know we have several clients on, so thank you to those that are attending that are our clients. We really do appreciate your business. For those that are not our clients, let me take a couple minutes and just tell you why you should have your business with Desjardins. And number one being Desjardins is safe. Disnet is the online brokerage for the Desjardins Financial Group, which is the 6th largest financial institution in Canada. We were recently awarded the Bloomberg Markets Report, the 2nd safest bank in the world. And if you want to read the article, you just Google Desjardins Safest Bank, and you will find the Canadian business article that details the report. To put that into Canadian perspective, TD is rated or mentioned in the article as number 5th in North America, but didn't even break the top 20 globally. This should be important for you with the past events like the financial crisis when we saw several large institutions go insolvent. It can definitely help you sleep better at night knowing the financial firm you're doing business with is rated very safe. On top of that, we're also a member of the CIPF, or the Canadian Investor Protection Fund. Number 1 in customer satisfaction. We have been awarded number 1 by J.D. Power and Associates in customer satisfaction, and we've had that spot, the number 1 spot, 4 out of the last 5 years. And great customer service and a great customer overall experience is what we strive for, and we really are there for you from opening your account and transferring your assets to supporting you using our platform and tools. Reliable, cost-effective service. We were the first discount brokerage in Canada, and we've got 30 years of experience, and this experience really does translate to a reliable platform that you can count on. And we offer real-time streaming quotes and very fast execution. As Tyler mentioned, it's very important to your trading, and as a direct access broker, your trades hit the market in 1/10 of a second. And cost effectiveness, active traders can trade as low as $5, but even if you're not an active trader, everyone at Disnet can trade at $9.95 flat fee equity trades. Powerful tools and education. We know how hard it is to consistently beat the markets and manage your accounts, and we're committed to bringing you the most powerful tools. And that's why we sponsor events like this, and we partnered with Stockscores, bringing you the Stockscores Market Scanner, as well as deep discounts for the Stockscores education is very important to us, and in helping you get the next level of education and taking your trading to the next level. Other features we have US dollar RSPs, virtual trailing stops, conditional orders. I would really encourage you to go to our website, disnet.com. You can sign up for a free demo of any of our platforms and view all of our tools and platforms there. So thank you very much, Tyler, for the opportunity to speak tonight. And once again, thank you to our customers. And I look forward to hearing from you. Tyler's going to put up a little poll here. If you want to hear from us, you just click yes there, and you'll get a contact from us tomorrow. We can take your situation offline, and we'd be happy to do that.
All right, great. Thanks, Wayne. So I've just put that poll up. Rather than have you write down Wayne's phone number and email address and everything, we find it's just simplest if someone is interested in Desjardins services and you want an email tomorrow, just answer yes to this poll, and Wayne or Daniel, who is his other person in his office there, will fire you an email with some basic information about the offer and the services provided by Desjardins, and then if you have an interest in that, you can follow up with them. So I'll just leave that up for a moment. Now, before I put up the poll, I had a screen up that just showed a special offer that is available right now. Anyone that opens an account before May 15th with Desjardins will get 3 months of my daily newsletter for free for new subscribers only. That's $177 value, so a little bit of incentive to give Wayne a call. He's a nice guy. I'm sure you'll enjoy talking to him, but if you don't like the conversation, at least you're getting 3 months of my daily newsletter for free. I'm being facetious. He's a great guy. So I'll leave that up for just another moment, and again, if you have any kind of an interest in having Desjardins send you some information tomorrow, it's all you have to do is say yes to this. I will forward your email address on to them. They're not going to bug you endlessly. They're a bank. They do business very prudently, so you don't have to worry about being annoyed by an endless stream of email from them. They're just going to let you know what's available, and then if you have sufficient interest, they'll follow up with you. All right, so I'm going to close that poll down, and then we're going to talk about the next thing here. Just let me shut that down there. All right, so now I'm just going to talk quickly about the live online trading and training that I have coming up this month. So from time to time during the year, I teach live during the day and in the evenings, and on the weekends too, actually, to sort of complement everything that's in the Stockscores Education Center. So the Stockscores Education Center, which I showed you already, is pretty complete. But what I do on Saturday, May 23rd is for 3 hours, I'm going to give you an overview class, much like tonight's webinar, same sort of situation. You're at your home. I'm talking to you over the internet, showing you a presentation. But we're going to take all of those lessons in the foundation section and sort of tie them all together and really sort of teach them as a bundle so that you can really get a sense of how all that stuff works. So that happens Saturday, May 23rd, starting at 9 a.m. Pacific time. For anyone that purchases the investor course or the active trader course, you're going to have access to that foundation overview on Saturday, May 23rd. Then the following week, Tuesday, May 26th until Friday, May 29th, in the evenings for anyone that buys the investor course or the active trader course, in the evenings from 6 until 7 Pacific time, I am going to do the market scanning process to look for stocks that meet the criteria of my strategies. We're actually going to try to find stocks to buy. And we're going to do that 4 nights in a row because it's a great way to learn with real market conditions, real opportunities. You're going to see me go through the process that I use to identify good trades. So position trading is in the evening from 6 until 9, or from 6 until 7, sorry, Pacific time. That's 9 till 10 Eastern time. For those that do the active trader course, you can actually watch me trade live for the first 2 hours of the day, again in a webinar. You're going to see one of my trading screens, and I'm going to just buy day trades and swing trades as I see them. I'll walk you through the process, how I find them. We're going to do it in real time on that real-time software I was showing you. We're going to do it on Stockscores.com using my scans, my day trading scans and my swing trading scans. But I'll actually buy the stocks that I find. And many of the people that participate in this also make the trades that I do. And that's all going to be done live starting at the market open, which is 6:30 a.m. Pacific time, 9:30 Eastern time, for about the first 2 hours of the day. Real educational. I record each session. Same thing with the investor sessions. Each one is recorded as a video so that you can go back to it and watch it as many times as you want. So if you buy the investor course, you get the investor market scanning in the evening. If you buy the active trader course, you get the active trader live trading during the day, plus you can attend the investor sessions as well. And everybody that does the investor or active trader class is going to join me for the foundation overview, which is also recorded. In case you can't make it that Saturday, May 23rd, you can watch a video of it later. Now, if you want that for free, you have to sign up for the investor active trader course before May 15th or by May 15th. So after May 15th, the price goes to $495 for that. Now, I know that I have a lot of my past students, so if you took my course last November and you want to participate in this live online training, you can do that. If you're an active trader student, you can do that. If you're an investor student, you can do the investor session. Instead of being $495, it's $195 before May 15th. I've sent out some emails about that. If you didn't receive them and you want me to send it to you again, just, well, best thing to do is just answer this poll. So I'm just going to launch this poll here, and this will come up right now. If you'd like an email about the upcoming trader training, which is starting again May 23rd. Originally, last webinar, I said it was going to be Monday, May 25th until Thursday, May 28th, but I was soon reminded that the U.S. stock markets are closed on Monday for Memorial Day. So we're going to do the live trading and market scanning on Tuesday till Friday, because there won't be much to do on Monday because the markets will be closed. So it doesn't make much sense to do that. So if you'd like a little bit of follow-up, again, I'm just going to fire you an email with the details of this upcoming class, the details of the investor and active trader program, and that special offer that comes before May 15th to get that live online training for free. Whether you're a DisNat client, which is discounted, or whether you're not a DisNat client, you're going to get this live online training for free as well. So I'll leave this up for another moment, and then we're going to start to do some stock analysis and answer some questions that have been coming in. In fact, while I'm leaving this up, I'll answer a few questions because some of them don't require me to look at charts. So the first question is, if you have a $50,000 account, how much should you put at risk per trade per stock? I suggest never more than 3% of your account should be risked in any one trade, so that would mean an upper limit of $1,500. Having said that, I think that's pretty aggressive. I think when you start, you should be risking zero, which means you're paper trading. You're using my simulator or you're paper trading just on paper, just to practice. Once you feel comfortable with your practice, then you can start trading with real capital and start with $100 worth of risk. Whether you have $10,000 or $1 million, start with $100 worth of risk to get yourself started. Because you got to practice. I mean, you got to manage your emotions, be disciplined, practice executing the trades. And it's like riding a bike. I can write books on how to ride a bike. I can show you how to ride a bike, but until you actually pedal, you're going to fall down once in a while. And so I want you to have those falls not cost you a lot. And that's why we start with paper trading using my simulator. And then when you're trading with real money, not a lot of risk so that you don't get your emotions involved too much. All right, next question. I'm going to close this poll now. I think everyone's had a chance to answer. And if you're watching today's poll as a video, you can just submit an email to me if you want some follow-up. So I'll close that down. And there's a website address that you can go to for a little more information on my courses, stockscores.com/learn. But I'll just continue to answer some questions here. Where are you? So this is the first time I hear you mention a special service you provide for active traders. Where can one find the details? So this service is only available if you are one of my active trader students. And I email those active trader students. If you are an active trader student and you didn't get the email, that means it probably landed in a junk folder somewhere or got flagged as spam. Unfortunately, with email, it's just not very reliable these days. So if you're an active trader student, you'd like to learn more about my live trading sessions. They go all month long. So Monday to Friday, 6:30 till 8:30, the first 2 hours of the market open, 9:30 to 11:30 Eastern time. I build watch lists. I execute the trades. I highlight the trades that I find. Basically, all the trades that I see, I tell you about in real time. It's $195, but it's only available if you're one of my active trader students. So, you can subscribe to the software and learn how to use it, or you can just have me do it for you. Most people want to learn how to do it, so I'm happy to teach you, but some people would rather just have me do it for them. And if they've taken my active trader course, I'm happy to do that. Next question here. When you have limited capital and a stock meets the entry criteria, but you cannot buy enough shares to accommodate your risk tolerance, should you pass on the trade or buy as many shares as you can afford? That's a tough one. I think if you don't have enough capital to take the risk tolerance, then I would pass on the trade. And the reason is that you just end up not getting a lot of bang for your buck. Like if you're trying to make a certain amount of money every day, and you get an opportunity in a higher price stock that's going to tie up all your capital, to take that trade and not really get the potential to make your goal profit for the day doesn't make much sense. You're better just to wait for a trade that you can buy enough of it to come along. And in any given day, there's 3 to 10 trades a day. If you have to pass on a couple because they're just stocks that are too expensive, pass on them and go with the next one. All right, so that's how I would do that. So there's a couple stock questions which I'll address in just a moment. Someone's asking, isn't the market open on Monday? Yes, it is, but it'll be dead. Anytime the U.S. markets are closed for a holiday, the Canadian market is dead. And for day trading, which is what I'm going to be doing during the day, most of my day trades are in the U.S. market, so we wouldn't want to waste our time just looking at the Canadian. So another question, I still work, would I be able to use the active trader via smartphone? You can do all the market scanning on the Stockscores tool on a smartphone. I don't think it's really constructive to day trade from a tablet or from a smartphone. It just requires too much focus and you need pretty good charts. You can swing trade though from a smartphone or a tablet. Do the market scans. I do it all the time. I'll do market scans on I have an iPhone. I have a big one of those iPhone Plus, so I've got a pretty big screen, but I do market scans on that all the time. What strategy do you use for trading larger amounts of capital? So the more capital you have, the longer term you have to be. So, because it's pretty hard to day trade more than, I would say, $1 million. If you have a considerable amount of capital, then you want to be focused a little bit more on swing and position trading. So I've got some investor strategies in the Stockscores market scan, things like the Stockscores Simple Weekly. If I go to my tools here and select the Stockscores Simple Weekly Canada or US, those ones are strategies that you do just on the weekends, Fridays, whatever, and they'll help you find stocks you can hold for 6 or 7 months, like longer term trades, still trades, not short term by any, or not buy and hold by any mean, but anywhere from 2 months to a year, let's say. That's the kind of thing you'll do. So I'll do that work on the weekend. Once you get good at it, you can do all that research in about 15 to 30 minutes. And all of that is taught in the Stockscores Education Center in the investor area. So if I go into investor right here, and there you see Stockscores Simple Weekly Strategy, there's the lesson that explains how to do that. So that's something you would want to do if you have more capital. All right, so I'm going to answer a few stock questions now. I'm going to go into Stockscores here and take a look at a few questions that have come in. T.ACQ. Now, I don't know if the person asking the question wants me to analyze this as a day or swing trade or position trade. I'm going to assume it's a position trade. As a position trade, it's something I would avoid. The stock is in a downward trend and it has not broken its downward trend. It looks to me maybe like it's going to stabilize here in the short term, but I don't see a reason to own this stock. Looking at the 3-year chart, you can see it went parabolic. This is a very typical hot stock thing to do where the trend gets steeper and steeper and steeper. It went parabolic there. When you get a breakdown of a parabolic trend, which we had at about $80, that's your signal to sell. And I would not revisit this stock until it can break its downward trend line from a rising bottom. Okay, another one, T.CCZ. A stock I would avoid. The sellers are in control. You see that it's got falling tops. A very illiquid stock. It traded one time today, so it's very illiquid. I don't like that kind of low liquidity. It makes it hard to move in and out of them. Okay, there was another stock question here. CLNE, where do I see upcoming resistance? All right, so let's take a look at the chart of CLNE. Now, resistance is a technical analysis concept. You can see the stock has done real well over the last month or so. And what we want to think about is where's the stock going to get stuck? Its next level of resistance shows up a little bit more clearly on a 3-year chart, and I think it's going to stall at about 1150. Now that doesn't mean it won't pull back first. Anytime a market moves up that quickly, like it's gone from $5 to $9 in 4 or 5 weeks, very likely it'll have a little pullback soon, but I think it can move up to $12, $11.50, $12 before it really gets stuck. So, I think it's broken the downward trend line. If I was to draw a line here, let me just imagine drawing a line across these tops. It looks like, yeah, it might be right at that downward trend line. So that could provide the impetus for a pullback here. And looking at what happened, just looking at the daily chart here, hasn't shown any sign of weakness yet. So I don't see any sign that the sellers are tired, but certainly those downward trend lines do provide some resistance. So you want to be watchful of that. Is liquidity also not a function of volume in addition to the number of times it trades in a day? Yeah, I think they're the same thing, but number of trades is a better gauge of liquidity. And the reason why is you could have a 30-cent stock that trades 1 million shares, or you could have a $30 stock that trades 1 million shares. It's two very different amounts of liquidity, obviously. 30 cents times 1 million shares is much less than $30 times 1 million shares. And so by looking at number of trades, I get a more accurate representation of how actively traded the stock really is, regardless of price. And so that's why I use number of trades as a measure of liquidity. All right, BASE, B-A-S. This is Basic Energy, stock that's been kind of heating up the last little while. I like this chart. I think it's got good potential to go higher. I don't love it. I would rate it a 7 out of 10. But it's an oil stock, so it broke its downward trend, has been building rising bottoms, trying to break out from this little pattern here. This is a strategy I have called a bottom fishing strategy. And as I said, I would rate it a 7 out of 10, decent potential to go higher. Now as a swing trade, let me just take a look as a swing trade. I didn't realize the question was as a swing trade. I think it's okay. I wouldn't say I love it though. Let me go look back a little farther. Yeah, it's pretty choppy, so I don't see an entry signal as a swing trade on it yet. I do like it as a position trade. SALT is another one. Stock to watch for sure. It's basing nicely after being in a downward trend, but I wouldn't buy it here. If it can break up through 275 with some good volume, I'd consider it. SVC, probably T.SVC. I think it's a good hold. I wouldn't buy it. Just take a little longer term view of it here. A little bit of running away from the trend line, so probably due for some profit taking. That's why I say it's a good hold, but I wouldn't buy it right now. What's the other one here? T.AVL, swing trades. I liked T.AVL as a position trade. I actually featured this in my newsletter, but it actually sunk like a rock today, so it's having a little trouble getting through resistance. Decent setup on the 1 month chart where it rallied yesterday, but it gave it all that back today. So that's a bit of a worrisome thing. It hasn't broken down through support, so it's still valid, but today's action has me worried a little bit. It might be one that you have to watch closely. FPP. So it's come alive with some abnormal activity. Now, as a swing trade, it may have given a signal 3 days ago. Yes, so my simple swing strategy, it gave an entry signal 3 days ago there at $1.60. It's moved up nicely since then. I wouldn't buy it now. I think the bus left the station, but if you own it at $1.60 or less, I think you're in good shape, so I would stick with it. Right now, support is at just under $1.80, so if it came back and closed below $1.80, I'd probably take the money and run. T.TOG. I like it longer term. It's suffering a little bit of a pullback. I think most of the energy names are, kind of struggling with their bounce back. They had a pretty good bounce. I don't think it's a stock I'd want to buy today, but if you bought it back here in this little breakout, which was okay, that was a nice little break through resistance, and it hasn't penetrated support yet, so it's still a valid hold, but it's having a little bit of a struggle right now with some profit taking in the energy sector. SZYM. This is a stock that I featured in my newsletter back here at $3.25 or so. We're now pushing $4. It pulled back a little bit. It looks really good to me. I think it's highly likely to continue its upward trend. Good action at the end of the day today. And so I like that. I think it resumes its upward trend. Probably 70% chance it resumes its upward trend. HIVE. Came alive yesterday. This is one that I noticed yesterday because it had a little bit of a abnormal action yesterday. I'm just going to make this a 10-day chart here. So there you can see that real break with abnormal activity there. I think it looks good. I don't know that I'd buy it unless it starts to inch up through 620, but if you own it, I think you're in decent shape. T.HWO. Definitely a stock to watch, building some optimism after being in a long-term downward trend. Still below the downward trend line, so it's not as good as some of the service companies and some of the energy names out there. I think it's okay, but probably find some better names to trade, although certainly if this one starts to move up through 420, then it shows that the buyers are getting pretty confident in. How do I account for low price stock that is liquid in terms of number of trades but not in terms of volume? Well, if it has a high number of trades, it'll have high volume too. So really you just look at number of trades, and it depends on the strategy. So if I'm position trading, I want to see at least 100 trades a day. If I'm swing trading, I want to see at least 500 on the Canadian market and 2,000 on the US market. If I'm day trading, I want to see 2,000 or 3,000 on the Canadian market and 15,000 in the US market. And that's how I would use number of trades there. All right, let's see if I've missed any questions. We're pretty much out of time, but I think I've got most of the questions here. I'm just scanning. Oh, someone asked me about Apple for a day or swing trade. Let's take a look at Apple. So I don't really see a reason to day or swing trade Apple right now. It traded abnormal volume today on the heels of yesterday's earnings, but it wasn't above its open. One of my criteria for day trading is that it be above the open, and didn't do that. So I don't see a reason to trade it, but that doesn't mean tomorrow it can't be. Just today it wasn't. I don't really see a reason to swing trade it right now either. I think it's one you stand aside on for now. It's basically hitting some long-term resistance. If we take a look at the daily chart, basically came back to February's highs. It's getting stuck there. It'll consolidate sideways. I think in a month, Apple's higher. I think in a week, hard to say. So it kind of depends on your time frame. Someone's asked me when I have time for my wife and kids. Good question. Believe it or not, I'm a fast typer. I get a lot done, so I'm able to do all of those things, although I don't know if I do anything 100%. Where do I find the number of trades? If you go into Stockscores, pull up any stock, Microsoft, for example. This is called the quick report. You can see their quick report. Go down to the trading section, and there it'll show you the number of trades. So Microsoft traded 192,000 times today. And in our market scanner, when you scan, you can say, show me all American stocks that traded at least 15,000 times and had an abnormal price gain with abnormal volume. I'm sort of building a scan on the fly here. And there's a list of stocks that did that. You can see JetBlue. Some of the stocks that I day traded today were on that list. All right, I think I've answered all the questions. Oh, how many trades do you need for penny stocks? Same number. That just depends what kind of trading you're doing. If you're going to position trade penny stocks, I'd want at least 100 trades on the U.S., on the Canadian market. U.S., probably more like 400 or 500. That's mostly because of algorithmic trading in the U.S. They trade more actively, even though there's not more people trading it. If you want a swing trade, same number, 500 Canadian market, 2,000 U.S. market. Is AKS a good swing trade? I liked AKS today. I thought it was pretty good, not outstanding. And the reason shows up maybe a little more clearly on this chart is that it was a little choppy. See, there's my pink dot there. That's what I look for. But this chart is very choppy, and that increases the chance that it will pull back before it goes higher. So I think if you took it as a swing trade, you're probably going to be okay, but I personally passed on it. I didn't think it was good enough. All right, I'm going to wrap up now. I want to thank everyone for being with us today. If you submitted a request to get some follow-up information, you'll get that maybe tonight or tomorrow from both Desjardin and myself. Remember that the May class has a deadline of May 15th. If you want that bonus online training for free, the deadline is May 15th, but I wouldn't necessarily wait till May 15th because the sooner you register, the more time you're going to have to work through the material so that you're just that much more ready for the foundation class on Saturday, May 23rd, and then the live trading and market scanning that following week. Remember, there's two courses. The investor course is for sort of the longer-term trader. The active trader course is for the short-term trader. Active trader includes everything in the others. So oftentimes I get those questions asked of me. I want to thank everyone for coming tonight, and I hope that you enjoyed it. I hope you learned something. We've got lots more webinars coming up. If you go to the Stockscores website, go to the home page, you can see there a whole list of webinars. Certainly register for more. I'm going to be doing one live trading on Wednesday next week where I'll show you what I'm trading that day. And we've got an investing with the Stockscores Approach on Thursday this week, Thursday, April 30th at 6 o'clock, same time, same place. So register for those. Register for as many as you want. They're all free. I will be emailing out a video of tonight's recording so you can watch this again. And thank you very much. Hope you had a good night.